So just a quick follow-up on this NASDAQ trade. This is setting up like a very good trade to hold on to, and it's all about context. Now, if we were at the very bottom of a range, we've been going down for several days, this would be make me a little bit nervous. This thing could spike back up. But this is considered a new trend because we've had this consolidation area, right? And so when you have a consolidation area, and then you have not a little break, because a lot of times you get these false breakouts. It just breaks down. But you get these big bars, and then you got this range extension. And look at this momentum oscillator. So the momentum oscillator, so we've had this area here, and you can see, the MACD during the day, high 43, low 27, and now the MACD is hitting 60, negative 60. So that shows you that this is a significant move here, and look at the size of it. So the range from the day previously was 18,500 to 18,800, so 300 points, and now from the low of the day 18,500 we're 18,350, so 150 points. So we're far enough out of the range that this is a fairly good opportunity, and even if it bounces, if it were to bounce, it would most likely come back to this area. That's just sort of how trading works. Trading is not just a random thing. There's just certain things like that. What are the exact numbers? I don't know. I don't know what the exact numbers are. I don't think you could uh, do anything other than you could come up with some averages of how far does the market need to break below the daily range and all those sorts of things. But that's something that in the end, if you were to rely on those statistics, it wouldn't go very well. That's something you just learn from experience. So this orange one, this is the range expansion contraction, and you can see. So I'm going to add a little bit more. Uh, let's just go 10,000 per bar. So let me just add a little bit more. And again, so we've had these wider ranges. Again, the range is getting smaller, 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 smaller in these tight little ranges. And that almost always precedes a breakout. And sure enough, boom, we have the gap down, retracement overnight. So now we've got this sort of flag forming after this breakout. And then we have this breakdown. And you can see right now, just channeling down. Um, so again, if you look at this, so today, yesterday, so now we're going back 3 days. We can see 3 days here, and you can see this volatility measure. So you can see on this breakout overnight, we hit a new momentum high, new range expansion. You can see that on this oscillator here, we got this new big plume lower, new momentum high over the past week or so, and now we've got this increasing um, momentum here. So this can certainly surpass, but you can see these big red bars here. So this is a very safe place to short. You could still short it now, and it should be all right. Because like I said, odds are even if it were to pop up, it would retest this low. So that's what we're watching right now. You can see the volatility right now. Normally, after a first breakout, you'll get a lot of this volatility, a lot of back and forth before, traders trying to buy the dip. And then eventually, the more time that goes by and the more that this trend asserts itself, um, the the smaller the bounces are until you end up with a capitulation, a higher volume sell. So this could take some time. This could be go on for some days and chop until we get a bigger break. But right now, we shorter than Nasdaq. You'd see we're up 12,000 right now on that. Now, the other thing I was going to update you on. So I just went. These are all the trades, So every day, um, the P&L for each commodity and what happened. And so basically, and so we're up, and I've got this negative. So I haven't actually put in the rest of the trades today. So this is actually without gold. So the statistics we made 70,000 in one trade today in gold. So the statistics will improve just based on that. But, this day it says negative 41,000, but we came back with the gold. So this day's right now we're actually, you see closed P&Ls 37,000. So it's sort of like the big opportunity in gold, and then this one. Um, but the stats, this is what they say so far. So we've got, average profit, we've got it by market, and then average loss, overall average for each market, and then total for all trades. So, and I can go in here and freeze panes real quick so we can actually drill down. So, for example, overall average. So in the euro, I've lost money. That hasn't done well. The bonds, I've lost money. Uh, Overall, Australian dollar, I've lost money overall. This shows sort of, okay, watch those markets. Bonds, sometimes they get the rhythm bad, and Australian dollar, with the big move it's had, we should have done better. And of course, we had a good one at the beginning, but then we got a little bit too excited about it. And actually, some of those trades we should have just held longer, and the ones that went against us, we should have got out quicker. But anyway, so overall, P&L ratio. So count each market wins and losses. So, for example, also, let's see, we have any big donkeys. Now, almost all of them, we have more profits than losses. The bonds, again, here's the exception. One profit and two losses. Um, Here, this one too, copper. So actually, two profits and three losses. So, but look at this. With the average profit is 18,000, the average loss is 3,000. So that's the kind of numbers you would expect to see. But yeah, bonds not so much. But anyways, overall, so far, um, P&L ratio. So 61% of the trades are profitable. Um, and the average profit in each trade is 8,000. The average loser is 3,500. So overall average trade is 2,300. So what we can do is we can have a goal. Let's get this P&L ratio up from 61%. Let's improve on that. Uh, that's especially good for psychology, but in terms of profitability, a lot of times it's more important to focus on getting the bigger winners. uh, Make sure you ride those winners when you get one. So um, this is the most important one, is that average profit. So average profit on these is 8,000. So we need to get that number a lot higher. Um, if $8,000 is there's nothing wrong with that. But all right. So anyways, here's the Nasdaq continuing to crater down. So this looks like a pretty good trade. Range expansion, increase in volume. I say increase in volume. I'm just looking at I'm just reading the tape, and I can see, there's bouncing around and stuff that's going on. But you can just sort of see that by looking at this. We've got bonds moving up. We've got gold has gone up. Um, so we see your typical markets that move against, but crude oil is up a buck on the day, so that's not following a suit down. Copper's continued to move up during the day, so this is like the stock. In fact, if you let's look at this today. The stock market, this is the S&Ps, the Nasdaq, and this is the Russell 2000. They're all getting hammered, and every single other market is up. So that's pretty interesting. But anyways, and Nasdaq right near the lows. Low that did 18,327. We're at 18,337. So we got some nice momentum. If this can, and we're down 620 points in Nasdaq right now. So this continues, some of these other markets will start to break. I did try to short copper, covered it with a small loss, thinking it would follow the markets lower, but it's not. It's actually been following gold higher. So that's the that's the tail of the tape right now.